So let's start the part 2 video. So today we are going to learn about the custodian banks. Here you go. Please check it out. So yeah. So here's comes the topic. So custodian banks. So what are these custodian banks? Commercial bank, universal banks, like the various types of banks, right? So what they do? Basically, they offer various services. Like you can keep your hard-earned money in a bank because it offers you the security, first thing. And second thing, you can deposit the amount. So where you can do the online transactions, as well as you can get some interest if you deposit certain amount into your bank account. If you open a fixed deposit account, so you can earn certain interest. So basically that is the reason why generally people prefer banks, right? And to get loans, they will visit the bank and they'll get the loan. So basically, these are the commercial banks that I'm discussing about. So what is custodian bank? Similar to this. So basically, this security brokers will do what? Like they will, and they must have to keep their cash as well as securities of whom of clients, because the security brokers will not hold this cash and securities with them. Okay, they'll just perform the transaction. That's it. They are just intermediary bodies. Okay, but here comes the picture where these custodian banks are involved. These stockbrokers will and must keep the cash and securities of whom clients separately by opening some custody accounts, and they will maintain that, and they will safe keep the cash and securities in the custodian banks. Okay. So basically, for whom these custodian banks will offer their custodian service to? Basically, these custodian banks will offer their services to the high net worth individuals, like mutual funds will open the account in a custodian bank, hedge funds, private equity firms, and pension funds, security brokers. These all people will come and open a bank account in the custodian banks, basically. Okay, so this is the thing. So you need to understand who are the qualified custodians. So basically, any financial institution which holds cash and securities for the investors, that financial institution is called as custodian, qualified custodians, as said. So who can become a qualified custodians? See, bank can become a qualified custodian, and as well as security brokers like dealers can become a qualified custodians. These people can become a qualified custodians by safekeeping the cash and securities with them, of whom for of investors. Okay, you need to remember this. So let's see what type of accounts are available in the custody. So let's see these things. So basically, when you open an account in the custody, automatically you will open three accounts. Okay, first one is Nostro account, and second one is depot account, and third one is AUC. Okay, so basically, these three things you need to remember. Okay, Nostro account means like the account which holds the cash. In Astro account, you will keep the cash. Okay, and in depot account, you need to uh, hold the financial assets of the client. Like in this depot account, you will be safekeeping the stocks, bonds, and mutual funds. So when it comes to the Astro account, you will be only holding the cash. Okay. And what is AUC? So AUC is not an account. Sorry for that. I have said it is an account. What is AUC? AUC means the total assets which were under the custody. Okay. So the total value of the financial assets that was holding by the custody. Here comes two things. Okay. First one is cash and second one is this financial assets. So both combinedly we are calculating as an asset. Okay. So these assets were holded are held by the custodians. Okay, this is the thing. So this is the AUC exact meaning. Okay, assets under the custody. What are the examples of custodian banks, like BNP Paribas? So this company is one of the custodian bank, and Northern Trust will be one, and State Street. Okay, it is one of the largest custodian bank, and BNY Mellon also one of the largest custodian bank. So this is the thing. Okay. So what are the responsibilities of the custodian? So what are the roles and responsibilities basically? So first thing, the custodian bank should safe keep the custody like assets. Okay, what assets like financial assets and cash. Okay, it should safe keep them. Okay, they should safe keep them. Then later, whenever it's needed, uh, they should move the cash and securities to the client. Whenever the clients need cash and securities, they need to move that safely. So that is the second thing. And like third thing is daily settlements. Okay. See, basically, sometimes a client will buy the securities. Sometimes client will sell the securities. Okay. Sometimes cash will be coming into the account, and sometimes cash will be going from the account, right? Sometimes debit and sometimes credit comes in and goes out. Okay, so you need to understand that you need to settle this accounts daily. Okay, you need to settle this, and you need to prepare a statement what is happening. So that is the one of the crucial responsibility of the custodian bank. So that's why we are stating that there will be daily statement that have to prepared by the custodian bank, and it should be sent to the client. Okay, that is the thing. And correct market valuation of the securities. If for suppose a client has bought a security, right? So you need to evaluate what is the exact current value of the market, what is the current value of the security, and you need to update that while preparing the daily statement. Okay, that is the thing. Okay, and the next thing, like security lending. So basically, when some other person needs securities uh, for lending, so these custodian banks will provide the securities. Okay, it also providing the borrowing services. Okay, and record keeping and accounting. You know, as accounting, what is accounting? Like recording. Okay, generalizing. Yeah, this all comes under accounting, right? So the responsibility of the custodian is also uh, deals with accounting. Okay, it also deals with accounting, where it has to maintain records of the securities hold and the cash that the custodian bank is holding. So you need to remember that, and collect the income and add securities to the corporate actions. Uh, so basically, sometimes if a client is investing into the in a company, so what happens is in a year there will be certain corporate actions. Okay, when corporate actions happen, so there will be changes in the securities value, or sometimes the company might be issuing dividends also. So it will be an income to the client. So what the client has to do, so the client has to collect the income behalf of the client. This custodian bank will collect the income behalf of the client, and it will be given to the client. Okay, that is what you need to understand. So these are the certain responsibilities of custodians. So let's go. What other types of custodians are there in completely in the world? So let's see. There will be global custodians and local custodians and sub custodians. So let us come to this topic called global custodians. What is global custodians? So basically, these global custodians will have operations all across the financial markets in world. Wherever the financial markets are there in the world, there will be six global custodians that were being operated. Okay, and coming to the local custodians here, these people will offer services in particular country and a specific region. In that specific region only, these local custodians will offer the securities. So where it's coming to the sub custodians, these fellows are agents to this global custodians uh, and the local sub custodians. They will deal with the part of work from this global custodians and local custodians. Okay, so like they are like assistants. Okay, so you need to understand this. So let's see. There are the different types of custodians as I have discussed, like BNP Paribas is one of the custodians, BNY Mellon and Citibank, Deutsche Bank, and HSBC and State Street. These are the topmost custodian banks. Okay. Let's go with this asset management companies. So let's discuss what are asset management companies. Basically, the asset management companies will manage the investments of an individual and institutions. Okay. Uh, they will manage the investments as well as they will invest into the variety of assets like stocks, bonds, real estate, alternative investments. Okay. So to explain it in very simple manner, so what I have to do is like, see, let us take an example. These asset management companies will collect the amount or money from various people, high net worth investors, institutional investors. Okay. They will pool the money. They will create a fund. Then they will manage the fund. So what is this fund? This is collective investment basically. Okay. This is collective investment. Different people will invest in a fund. Okay. They'll create a fund, and this fund will be invested into the variety of assets like stock, bonds, real estate, alternative investments. So the fund value will be increasing day by day because of the investments that they have done. Okay. Then later, the profits will be shared to the investors who was investing into this fund. So this is the entire process. Okay. This is asset management companies will do. So they have a very good expertise team. So they will manage this fund properly, and they'll regulate them. So basically they will invest in stocks, bonds, real estate, and alternative investments. This is the thing. Okay. So for investing into the various kinds of assets, so basically they'll charge certain fees for their services. Okay. What happens here is this asset management companies will have qualified expertise. So these are called as portfolio managers or investment managers or fund managers. They're like very well experienced candidates as well as qualified professionals who have done CFA, FRM kind of global certifications. These fellows has a huge knowledge on the market. So these fellows will manage the fund, and it's high risky job, and we need to work very hard for this. Okay. So that is the thing. uh, these guys will manage the fund, and they will generate the profit from the fund, and this profits will be divided and distributed to the investors who were investing in this fund generally. So this is the thing, overall thing. So there are certain types of services which are offered to the clients, like this fund managers will do the investment decisions for the individuals, and they will manage the portfolio funds, the pool of funds. Then later they'll conduct research. Okay. They'll conduct research, they'll conduct research and find a best investment options. So these are the services that were offered by the fund management companies. Okay. So let's see, so to combine this into one part, so I can say that basically, first of all, this fund manager or investment manager does a research with a very big team. So the team includes well qualified professionals. Uh, they will study the market, and they'll find the opportunities, and they'll find the best investment strategy. Then later they'll invest their amount. Okay. And this investment decisions will be made by the professional candidates who were qualified CFAs and CAs and financial risk management professionals. So they will assess the risk, and they will take the investment decisions. Then later they'll manage the portfolio. So when to sell, what to sell, how much to buy, what to buy. So these all decisions will be taken by this investment managers or fund managers and portfolio managers. Okay, and they will be divided. So basically, who will invest into this fund of fund companies, like individuals, like any individuals will invest into that, and fund management companies and banks and insurance companies will be investing their amount, hardened amount into this fund management companies. Okay. like asset management companies. So generally, what kind of charge the asset management companies will take? So basically, the asset management companies will take a fee that is called management fee. So what it means, like, there will be certain percentage of amount uh, will be charged because they has managed the fund. uh, that percentage will be covering all the operating expenses, whatever the operating expenses was incurred. So that amount will be covered in the management fee and load fee. So what is load fee means, like, investors will pay certain fee when buying and selling the mutual fund shares. So then the load fee will be charged, okay? And redemption fee. So like it is like some charge and fee that is paid for selling the shares of fund. So that is called redemption fee. And what is account fee means, like, the accounting account fee is like, it is paid for maintaining an account and providing services. For providing services and maintaining account, this account fee is paid. So performance fee is like, this fee is charged because when the fund is making profits after a benchmark. For suppose the fund is about 100 crores, so suddenly it went up to 100% and the fund became 200 cr. So it has reached to a limit, it has reached to a benchmark. So then the performance fees will be charged by the portfolio managers or asset managers. And these are the certain types of fees that was paid to the AMCs, asset management companies. So let's see what are the largest asset management companies in the world. So the BlackRock is the one. So who is currently managing $9.5 trillion of assets. And the Vanguard Group is a second one, where it is managing $7.2 trillion dollars. And State Street Global Advisory is the one, it is managing 3.1 trillion dollars, and JP Morgan is maintaining 2.3 trillion. So these are the largest asset management companies. So let's see about this security writers. So who are they basically? Okay, coming to this, security underwriters means, in primary markets, security underwriters are to be said as intermediaries between the issuers and investors. Whoever is issuing the securities, whoever wants to buy the securities, investors. Issuer means who is issuing the securities. Investor means who wants to buy the security. So in between two people, so there should be an intermediary body, right? So those people are underwriters. They were involved in primary markets actually. Okay, what they do, like, what is the role of security underwriters in this? So basically, they will do this due diligence while issuing a sale. Means they will research whether the company is good or not. Is this share is having any kind of risk or not? They will do the due diligence and the background work. Okay, so that is the thing. And they will assess the complete risk in the securities, and they will provide the information to the investors, and they will analyze what kind of risk is associated, and they will provide the proper information to the investors. And they will do proper research and understand what is the demand for the security in the market. And with that, it will help to the issuer who is issuing the share or security, so they can fix up a price. As well as this security underwriters only decide the price of the security. They will analyze the market and decide how much price to be quoted to sell the security. That's what they will do. And they will market the securities also, and they will visit to various institutional investors and individual investors, okay, and high net worth investors. And they will arrange certain meetings, and they will run certain camps, okay, marketing campaigns. So they will do all of this, and they will do certain presentations to show how potential this security is in the market. And they will show how much demand the security is having in the market. They will show these all things, and They will market the securities. So, and they'll convince the investors to invest into the companies and buy the shares. So this is the thing. So there are certain types of underwriters, basically. So who are there? Basically, there will be a lead underwriter. Okay, there will be lead underwriter. What his work is like, he's a main underwriter in this underwriting services. So what he'll do is, he will take certain charge for entire underwriting process, and his main responsibility is to price the security and allocation of work to other underwriters, and he will assign certain work to the other underwriters. That is his complete process, complete responsibility. Okay, first of all, he will price the security, then later he will assign the work to the other underwriters. If you take this construction companies, or if you visit the construction site, there will be a main candidate. He is the contractor. What the contractor does is, he will assign the work to the other what laborers, right, to build a building. So here also seems like, if coming to the lead underwriter, he's the main candidate. He will assign the work to other underwriters, allocation of work, and he'll price the security, how much charge that security should have. So these are all things the lead underwriter will do, and there will be a co-manager. So what the co-manager will do is like, he is the fellow who will be working as assistant to the lead underwriter. He will involve in the marketing activities. The lead underwriter will involve in the pricing of security, where this co-manager will involving in the marketing activities. So what the co-manager will do is like, he will allocate the shares to the investors. Okay. Uh, he go and he allocate the shares to investors. If the investor is quoting quoting higher price, so he'll allocate the share to the investor who quoted high price. So that is his work. Okay. So that's what a co-manager responsibilities. And syndicate. So what is a syndicate? Syndicate is like a group. So in this group, a group of underwriters will come together and they'll form as a syndicate. So this syndicate will buy the securities and sell the securities. So what is the reason behind this syndication? Why they form a syndicate? Because they can spread the risk. Okay. And they can sell the securities in the market collectively. So this is why the underwriters will come together and they will form a group. We are calling that group is called syndicate. Okay. What does it mean to spread risk? Basically, spreading risk means, if underwriting single underwriter is buying the securities, means if he get loss, 100% the liability will be on his shoulders. He need to pay the full amount. Okay, and he'll get into the loss. If group of people are coming together, so the risk will be distributed equally. Like, he might be getting 20% of risk, and another person will be getting 20% of risk. So if 5 members is getting out of 100%, 20% will be divided. If more people are coming, the risk will be spreaded among. Okay, that's the thing, because collectively they are buying. So that's why we are mentioning the word called syndicate. So that is what you need to understand. And there will be a selling group. It is a part of underwriting. So basically, these groups will completely work under the lead underwriter. These fellows only will market and sell the securities. That's their job. And let's see. And I have discussed about types of underwriters, but coming to this, this is called types of underwriting services. So what type of underwriting services are there? Basically, but the firm commitment underwriting will be there. In the firm commitment underwriting, uh, this under in this method, like, the underwriter should buy all the shares from the issuer, and he needs to resell them into the market. If suppose some shares are not sold, some shares are unsold, so the underwriter have to take them, and the underwriter should buy, because he is liable, because he has committed to the firm that he is going to buy everything which was left over. So that is the thing. So mostly the underwriters will not do this kind of commitment. Okay. So in some cases, if the share has more demand, so then they will agree to go with this firm commitment underwriting. And there is other thing called best efforts underwriting. In this type of underwriting, what happens is like the underwriter will not guarantee that he only will purchase all the securities from the issuer, but he'll say that he'll be keeping all his efforts, all his best efforts to sell the securities to the public. In case if the securities is unsold, so then it will be issued to the company itself, like issuer. So that is the thing. That is called best efforts underwriting. In this agreement, so the company will, the underwriting company will say that they will give the best efforts to sell the securities. That is the thing. Okay. First one is firm commitment. If anything is unsold, the underwriter should buy. And in the best efforts underwriting, they will give the best effort to sell the securities. If anything is unsold, so and then it will be returned to the issuer. That is the thing. And all or none underwriting. See, simply all or none will say is that like if the securities is issued completely, then only the underwriting will happen. Like if some securities are sold and some securities are unsold, then the issuer will be having the right to cancel the offer. Okay, everything should be sold or nothing should be issued. So that is the rule here. So you need to understand this. These are the types of underwriting. And other thing called bought deal underwriting. So what does it mean called bought deal underwriting? So here the underwriter will agrees to purchase all the securities from the issuer, and he'll say that, and he'll resell through the public. First of all, this underwriter only will buy all the securities. Then later he'll resell the securities to the public. So mostly, if the company is having high demand, then the underwriter will strategically take a move to this kind of strategy. Okay, because they can earn profits on reselling. So let's see largest underwriters in India. So SBI Capital Markets is one of the best largest underwriters in India, and ICICI Securities and the Kotak Investment Banking Services, Axis Capital and IDFC Services. So that's it. And now let's see what is registered investment advisors, RIS. So what are they and who are they? So basically, registered investment advisors are the asset management companies will manage the investments like for the institutions like funds and banks and insurance companies. What they'll do is like the investment advisors will offer the investment advice to the individual investors. Okay. Uh, what I have to say is like what the asset management companies will do. So basically, these asset management companies will collect the fund, right? Collect the fund and they'll manage the fund and they'll invest into the various asset classes like stocks, bonds, etc. Real estate like that. So, but investment advisors only gives advice to the individual investors who have money, like high institutional investors, who businessmen like that, and they will come to them, and they'll give the investment advisors for saving and investing into various asset classes. Every investment advisor should be qualified, and it must be registered with the SEC, Security Exchange Commission. So the Security Exchange Commission will monitor the investment advisors and what kind of investment advisors that the investment advisors are giving. So this all comes under registered investment advisors. The investment advisors must be registered. That's why we are using registered investment advisors. So that is up to now. So I think you have understood a bit. So for the next lesson, we are going to continue on the topic called prime brokerage firms.